G'day everyone, welcome to a terrific Tuesday here in Tasmania. I was trying to think of another word. Tremendous. I don't know. That'll do. Glad you could join us for another Ttr UK session, and of course it is the 16th day of April 2019. What is happening on that day? One wonders in terms of news events and data releases. Let's take a look-see, shall we? The Forex Factory is the place we can visit and see if we can locate some information. I'll share that with you. Whoa, there we go. Front and center. There we go. Tuesday, April 16th. Aussie news already out today, where we saw the release of the RBA's monetary policy meeting minutes. And I've got to say that had an adverse effect on the Aussie dollar as it tumbled against all the major currencies. And yeah, not too sure what the in-depth part of that was. Monetary policy meeting minutes tend to send me to sleep, to be fair. They're very, very long documents. And I don't tend to read them in their entirety, so I'm not 100% up to speed with that. Maybe we'll find something out as we go through the show and we can share that with you. But I think essentially they're talking, as they have been for months and months and months, that the next interest rate move on the Aussie dollar will not be an increase. And I think that was probably underlined and expanded on, etc., etc., etc. So that's done and dusted for the day. I was looking for a retracement on the Aussie pair, so that may not be a bad thing. The fact that news has been taken in a negative vein for the Aussie. See if we can find some entries for a long. At 9:30, which is a little under 2 hours away from now, we will be looking at the release of the average earnings index. I don't quite understand what 3 months and year is. Quarterly over year, what does that mean? But no, if we look at these figures, they don't vary too much, do they? Certainly not since November of 2018 and up to now. What does the graph look like? Well, it looks like this, trending upward, it would seem, since middle of 2017. We've been on a fairly upward trend, one would think. Last month or last quarter, last month. I don't understand. If it's a 3 month, no, don't want to go there. All right, so I'll put it this way: the last release of this particular, the average earnings index, I think in that area for the pound. I'm a pound fan today, and I'll point that out in a little bit of an analysis on the cross in due course. Also coming up today, well, not really today, overnight for most of us, will be the CPI figures, the quarterly CPI figures out of Kiwi land. Kiwi of late hasn't been travelling too well, and in a conversation last night that we had in the original show with all the seniors, well, not all the senior trades, most of the senior trades are in that show. We were talking about the Kiwi and the likelihood, in fact, that the Kiwi was going to be under further pressure when the interest rates are announced. When is that? Let me have a look. It's not this week. In Kiwi land, it is not next week. Short week next week, of course, because of Easter. The week after that, we have unemployment rates. So we're still a way away from that. Okay. Let me go to the next screen. I won't go any further. This is becoming very boring, of course. In the second week of May, when we're all told to stay away, that's where it will happen on Wednesday, May 8th. So the RBNZ statement, of course, there's no forecast out for that at the moment, but a couple of Kiwis, in fact, not only interest rate cut, but a bevy of them hit in the same breath. So watch the space. Watch the space on that one. I'll certainly be watching it with interest. But if that starts to become a popular theme, to remain under pressure. That could be very interesting. In particular, if you're trading the Aussie and the Kiwi, the cash rate on the Aussie on May the 7th followed the next day by the interest rate on the Kiwi. So that could be an interesting week, the second week of May, in particular for the Aussie and the Kiwi. So, yeah, keep your eye on that. If there's more whispers around the place that the Kiwi cash rate will fall not once or not to 25 basis points in one go and then followed up by a second, but there is a bit of a whisper around they may even go big the first time round. That could be very, very interesting. Okay, let's get back into this week. And this day, in fact, and I think we're pretty much done with that. We're talking about the Kiwi and the CPI figures coming out, as I say, overnight for most of us. So that pretty much wraps it up in terms of what's happening in the news. Of course, I don't take too much notice of these orange events. Ash does, because it tends to move the FTSE if it's relevant. And I don't see anything real that's probably significant. The economic sentiment is tipped to be far better this time round for Germany than it was previously. Yeah, I don't know. I read too much into that. I'm not going to let it affect my trading. So let's get on with the job.
I'm with you, mate. Is that today? Oh, that is today.
That is today, mate. Absolutely.
Oh, wow. Okay.
CPI figures.
That could. That's from Germany, you said.
Oh no, that's the economic sentiment.
Because there was some numbers from Germany last time, which actually did create a decent opportunity. And people are going to be watching
CPI just then on the pounds, not average earnings.
So we got average earnings from the UK, unemployment claimant count. Oh yeah, ZEW sentiment. Oh no, actually, you know what? I think it was manufacturing last time.
Yeah, that was a bit of a buffer. Yeah.
Yeah. Oh, okay. Well, numbers from Germany are always important. So let's see if that can curb this rally. I woke up this morning to further upside in the FTSE 100, and at this stage, it seems to be holding those gains. So whether
take a look, mate, I'm pretty much finished the wrap on the news.
Okay, great.
Deduced that the Aussie was a sell today, or has been a sell today, not necessarily for me, based on the well, you'd have to call them dovish minutes, I suppose.
Is that what it was? Yeah, I haven't read that, so I'll have a look at that. Royal Bank of Australia. I'll have a look at that.
Yeah, those minutes take forever to read. I don't normally have time to read them. But if you do, then let us know.
Yeah, there's some of them are really good. The way that they set them out, they format them, so you can actually find the relevant bits quite quickly, can't you? But some of them just kind of go down a list, which is awful.
Good luck. Have fun.
Yeah.
What can we expect on the FTSE?
Right, let's have a look. I'll just bring that up for later. Okay. Yeah, so the FTSE 100, let's have a quick check. We've had so far another push to the upside. It is, I'm always getting bored of myself, mate, to be quite honest, when it comes down to the FTSE, because I just can't find a way in. And it's it's just become boring for myself. It feels like this consolidation's gone on forever. But when I actually looked at the chart the other day, it's only really 1, 2, 3, 4, 5, 6, 7. It's only 8 days, and when you consider this area over here, you know, something kind of similar. There was a little bit more price movement, I suppose. In actual fact, there was quite a bit more price movement over there, but you know, it's not a you know, particularly long period. It just feels like it's going on forever. Where
Mate, the good part is once the spring is finished winding up, it's going to release. So if we can get it in the right posse, we'll be okay.
That's absolutely right. But the difficulty is the upside position is just not that attractive. I mean, there's probably enough room. There's probably enough room. Yeah, there's probably enough room for another 100 pips. It's just indicators are so overbought here. It feels like it's gone a long way very quickly. It's just I'm finding it really difficult to kind of square that circle where realistically it's one of those markets that you just sort of think you just kind of need to get in. But by the same token, getting in is just it just feels kind of dangerous. It just feels like really dangerous at these levels. But it's just
yeah, look, I'm the same, absolutely the same.
It's holding and holding and holding. You know, we got you know, price breakout patterns is another sort of breakout pattern really at this point, and it's got to get through there even before I get what I want. And I'm not asking you for a lot, market. I just want a little bit of a dip, and that's what I need. Just a little bit of a dip into this area, and then I can look for the long. But before that, I'm just struggling to justify it. And I'm in that phase where I'm effectively looking at a market and may have to see it go, and may have to see it go without me, just because it's just not giving me an opportunity. But coming back to the kind of detailed charts, if this is an overview, and this is the other thing about it, is that we look at this on a weekly chart. And the weekly chart does have this hanging man, so there's obviously been a bit of profit taking in this area, and with bars like this, they look like extension legs, and it looks like a reversal bar, and it looks like it would drift to the downside. Now this is a weekly chart, so this could take all week. We might wait until Friday before we actually see some retracement, but all that time we're just kind of fluctuating around this point, and it might be that it attacks the highs again, and if it does attack and get through the highs, then that's obviously going to be a pretty bullish signal, because of a negative bar turning into a bullish bar effectively. So let's have a look at this, as I say, on some of the detailed charts, and bring the pivots in. And we got kind of double tops now in these areas up here, so that in itself is suggesting that there could be some weakness. With the other thing about the double tops is that they have started to cause a bit of price and indicator divergence. When we look down here, the indicators.
Mate, while you're having a look at that, I've just got to duck off for 2 seconds. I'll be straight back.
Yeah, go for it. So we see the indicator is just showing that when it hit this high previously, it was at its highest point. The next point, it came down even further, and we're back to the price point again, and it's coming down even further. So there's a little bit of price and momentum divergence here. So suggestion that there's some weakness, which is another reason why going long is just pretty difficult to justify. But by the same token, going short in a market like this is just an impossibility. So would not be wise at all. And waiting is the only thing that we can do here, which is very frustrating. Looking at the hourly now. Hourly is suggesting a breakthrough here. And again, a hold. It looked like it was going to break down yesterday under the pivots, just swept the pivots aside. Pivots are very close, and that does that's again indicative of a market which is going sideways when the pivots are stacked on top of each other, because the daily just starts meandering around the weekly. So that's another reason that we don't really want to be trading that. And I'll show you that in context. Yeah, we can see it here. when the pivots were right on top of each other, the market really kind of had a struggle to know which direction to go in. So you want to look for this as a bit of an indication that that things are on a pause, at least. Now, the only other chart that I was looking at yesterday was the pound Kiwi, and I called the pound Kiwi for a potential short in the show. So let's have a quick look at that. I don't think that's gone too far either. Yeah, it's still remaining just above these pivots, and it needs to get below the pivots for it to really kind of kick in. The short was called at 93.78, so just a little bit above where we are, about here, about that area there. So just a little bit above, and managed to find a double bottom down there, but it did just create just a slight lower high up here. So let's see what happens with this. This is going to be data and news dependent. So we're really waiting on that average earnings to come. And when average earnings comes out, then we might start to, well, we probably will see a shift in price on this one as well. So there are possible things going on. There are things that are happening out there, but probably a little bit of a wait and see for the day. Never mind for the pattern, never mind for the longer term pattern on the FTSE. We're just kind of looking at something a bit longer term and a bit shorter term to wait for.
That range is maintaining its integrity, mate, or in fact, it may be tightening up to the high side.
What we talking about? The
support seems to have got higher.
Were you talking about the pound?
Mm.
Yes, it has, isn't it? Yeah,
Pound Kiwi, right? Yeah.
Pound Kiwi, yeah. And looking at this chart again, it's a bit of a difficult chart to read in many respects because it hasn't really gone anywhere. I'm not looking for a huge dip to the downside, but I am looking for a bit of a dip down to this trend line down here. And there has been a little bit, the area that I was looking at has proved to be an area that that has provided some selling opportunities, but it hasn't really kind of followed through, and that's always the issue, isn't it? You look for an area where you can trade, and then you look for the follow through, and so far that hasn't happened, which I guess is indicative of a market which is waiting for news as well. So. I guess that's what we got to do here. We just got to wait for that news and data, and when that news and data comes out, the pound will likely start to go in a direction. I think the whole Brexit hyperbole is probably being pushed down the road now. We can focus on the numbers. So if the numbers are decent from the UK, then it'll probably rally.
I'm bullish. I don't know about the numbers, but I am bullish the pound today. I've seen a very suspicious or conspicuous looking ascending triangle that looks as though it wants to break. And I think I've actually got an order on that as we speak.
Oh, okay. Let's have a look.
Okay.
Sounds well worth talking about today, actually, because of the news.
Okay, let's see what we got. Okay, so I've marked out the ascending triangle, which is fairly obvious, and it's also at a fairly conspicuous level, which of course is the monthly pivot, which is, I think, as I pointed out yesterday, been hammered and hammered and hammered and hammered and hammered. Yet we continue to get higher lows, which of course is what shapes an ascending triangle. I'm okay to give it a crack today on the back of this bar here, but I had to get my stop loss underneath the weekly pivot because this hasn't really come to where I would like it to have come to and then rejected. I would love it to have been at the confluence of the weekly pivot and the bottom of that trend line, or the top of that trend line, whichever way you want to put it. Certainly it's a trend line, a support trend line. So what I would like to have seen is that test there. In fact, to be fair, I would like to have seen a break of here, then consolidation back above and re-entry, giving me something very, very similar to what we've got here in terms of an entry. Now, I keep saying you can't. You can do whatever you like, but I can't trade through the monthly pivot without taking profit. And I'm hoping this will get a wriggle on very, very quickly and hit that confluence area in no time flat, which would mean that we've got a fair bit of acceleration in the market there, and we can actually smash through it. But I'm taking profit there, obviously, because I don't want to trade through that without doing so. And it's there that you would either expect one of two things, as with all trend lines, and this time we've got a mate, we've got a horizontal level known as the monthly pivot. Every time a price comes to it after a bit of a push away from it, it's going to do one of two things. It's going to smash through, or it's going to bounce off it. I'm hoping that that will be a smash through, but I'm not prepared to do that at full risk. So that's why I'm taking a bit of an insurance policy here by taking profit at that level. Now, should it not break through on this occasion, it won't be the end of the world for me, because I think there's probably going to be other opportunities. So this is really a bit of an insurance. I call them just in cases. It's a just in case trade that I'm actually taking here, just in case it goes prematurely, which is really what this is. This is a little bit early for me. I'd much preferred it to retrace back to the weekly pivot before it went, but we will see. On the bigger picture, it just looks horrible if you take out that that ascending triangle that we do have. In real terms, you know, we're definitely consolidating. There's no question, and we are in no man's land in many regards, because we're just so in between the support and the resistance that it isn't funny. But that said, in the microcosm of the smaller time frames, I think there is a possibility to take this break if it does occur. So that's exactly what I'm planning on doing. No real conviction in terms of a direction for the cross. I think, as you said, Ash, there's probably reason to think if the news is good, the pound will rally. Outside of that, we've still got a Brexit that I suppose has gone away in some degrees, or to some degree, but it doesn't take a whole lot to bring us back there. It only takes a statement or a meeting that leaks out, or whatever the case may be, and we've got movement in a direction which we simply don't know. So for that reason, it's still a cloud over our heads, and I think we just need to be aware of it, not so much scared of it, but aware of it. And if it does start to move in a crazy fashion, then we probably need to do something about that. Either reduce our risk or get money off the table very quickly. I think that's probably a good idea in any case, getting money off the table as quickly as possible.
Yeah.
And that will be my attitude. So that's why I'm a little bit bullish, mate. It's just purely a technical pattern that I'm trading. That's all.
Yeah, no, I can appreciate that, mate. I can completely appreciate it. I've just been reading a little bit about the from the RBA statement, and it's quite. I mean, you know, if we're looking at just the effect on Australia, it might be a little bit different, and I haven't got to that point just yet. But it's quite a subdued statement in some respects. It doesn't really kind of talk anything up, and it doesn't really talk anything down. You know, there's they talk about China, because obviously it's going to be something which is really important to Australia. They talk about the coal exports being affected as well, with tariffs being put on that. They talk about the world economy just I guess just being a little bit softer, but without anything real, you know, anything substantial, I should say. There's no substantial moves to the upside, no substantial moves to the downside, which is, I suppose, when we were talking yesterday about you know, when Julian was talking about this low volatility environment, that is really just coming through in the statements. You know, Mario Draghi, it was quite interesting to see what happened with the Eurozone with after Mario Draghi's speech, because Mario Draghi was specifically asked but on both occasions about the chance of a recession, and on both occasions he said it's very, very limited. So people just don't seem to be that worried. That the central banks don't seem to be too concerned. The Australian,
the Australian, look, it's really bullish, you know.
Well, it kind of. I mean, this one paragraph which I'll read is it says, in China, growth in domestic demand has slowed, had slowed. At its March meeting, the National People's Congress had set a target of 6 to 6.5% for the growth in output in 2019, which was below the target of around 6.5% in 2018. Members noted signs that stimulus measures implemented by the authorities over recent months were having an impact. Growth in total social financing had increased a little after slowing over the preceding year, and growth in infrastructure investment and retail spending had recovered. Residential construction activity had also increased. However, some recent indications of production and investment in the manufacturing sector, which is more exposed to external demand, had been subdued. Exports from China to the United States had continued to decline, but China's imports from the United States had increased a little over the first few months of 2019, after an earlier sharp decline. Australia coal shipments had continued to be affected by customs delays at Chinese ports. It's just a little bit... it's a bit non-committal in a way. You know, it's just like using words like slowed rather than... Well, I suppose, slowing rather, in fact, maybe that's what it is, after slowing, rather than kind of saying after sharp declines. There's nothing, there's just the word decline. There's no extra description of what that decline is. So it's just all a bit soft rather than being... I beg your pardon?
I don't think anything's really changed. You know, they've been singing the same song for quite some time. And in many regards, and I say this as a proud Australian, I suppose, the RBA are, I think, to my mind, leaders. That they, pardon me, I've got something stuck in the throat. They've been spruiking for the longest time that the next move in interest rates will be down, and it took the world a long time to, I guess, catch that theme, which now most central banks seem to have. I think for the reason you just mentioned, the non-statement, if you like, is very much an MO of the RBA, because they are very circumspect. They're not a gung-ho operator who will react to micro economics, for instance, unlike... Well, I'll use the example of the Fed, who, don't take much arm twisting to react to the indicators that they get. They act very, very quickly. Sometimes some would say too quickly. I would say that, and they can land their economy in all sorts of poo-poos down the track. I'm not suggesting that's the case at the moment, though it wouldn't surprise me in the least. But I think the RBA are very circumspect. And I think we talked about this as well last night. Patience. They're a very, very patient central bank. And I think you're probably seeing that in a lack of conviction in either direction at the moment, because they will, in fact, do as they say. They will look at the numbers, not a specific and recent set of numbers, but all the numbers that they get in a sequence of events, like a year or 6 months or whatever the case may be, instead of just reacting to one number. So I think in that regard, that's probably why you're seeing a statement which is typical of an RBA statement from what you've just described.
Yeah.
That is really not saying too much.
Yeah. I mean, they're kind of, you're absolutely right. They're not really saying too much. Just on financial markets, it's saying at the March meeting, the US Federal Reserve Open Market Committee had kept the Fed fund rates unchanged and announced that the decline in the Federal Reserve asset holdings would slow from May and cease after September, which was sooner than expected. The FOMC had published the quarterly update of its members' projections for where they believe the federal fund rate was likely to be in the coming years. These projections implied the federal fund rate was likely to remain unchanged throughout the rest of 2019, followed by one increase of 25 basis points in 2020, which we kind of know. I mean, they're just kind of reiterating, and then they go on to the Eurozone. The Euro area and Japan financial market pricing indicated that policy rates were expected to maintain at very low levels for an extended period, in line with recent statements. So they're not really kind of telling us anything new. They then go on to talk about the 10-year government bond yields. I don't know, and this is what a load of flap. I mean, what's the point of a statement like that? And this is why it's probably a hard statement to read, because they don't really talk about anything new. They just talk about what the other governments are doing around the world, and we already know that stuff.
Yep, we do indeed. So I'm not reading too much into it, and that's a good thing, because it has driven the Aussie down, which is really giving us a buying opportunity, in my humble opinion. So
yeah, I'd agree with that. I'd agree with that, and let's have a look at that, because the Aussie, when we look at it on a 4-hour chart and on a 1-day chart, interesting pattern going on here again, but on a daily chart, I suppose it was always going to struggle at these particular levels, and then with an RBA statement coming out as it has, it's moved to the downside. And again, this is where the news can create opportunities, because what time was that RBA statement? 2:30 a.m. So that would be 4:30 on this. Let's have a look at this on an hourly chart. No, it's no opportunity there, is it? It just happened really as it went. But we certainly know that without a change in sentiment, that this will probably continue to lead us to the downside. How did that affect the Aussie CAD? Because that was the one that I was looking at quite recently. Yeah, interesting really with the Aussie CAD. It's created certainly a short-term buying opportunity here, back to this point. Not something that I'd be particularly keen on playing now, but to the downside. But it did create a buying opportunity at this area. And more often than not, it seems to be the case, doesn't it, where these statements kind of drag the market to a more favourable price point, and then the preceding trend will just will continue. Certainly to try and regain some fresh highs, and maybe that's where we see the pause. So if we're looking at this to the downside, I would be looking at this trend line here.
Yep.
And if that trend line isn't able to get broken through, it's much more likely to be rejected, and this chart actually starts to look a lot more attractive, and maybe some maybe some Aussie CAD around about the spot 9590, maybe spot 9588 or something like that. Let's just bring this in with some indicators as well. There's a daily pivot right in the way there, which is not that conducive to trying to get back to the upside. But these pivots are getting in the way of these trend lines at the minute, aren't they?
Mate, you got to listen. You got to just take your time and wait till they do what they do.
Yeah. Which could actually cause a little bit of a squeezing in this area, with this trend line and the pivot there. Could cause a bit of a squeezing. I suspect that's not gonna. Oh, it's possible. Just possible that could meet towards the end of the day. And be close enough by the end of the day. But certainly the trend line being attacked would be the area that I'd be interested in some potential shorts in the Aussie CAD anyway.
Okay. I'm an Aussie bull, but yeah, I don't think I can trade Aussie long here right now. And although that said, let's have a look at my chart on Aussie CAD. I still think there's a little bit of room for upside. This level here, which was the horizontal level 95.77, which is exactly where price is right now. Exactly where price is right now. And we've broken through that level. We're now retesting it. And we've got a big confluence area up here. Well, when I say big confluence area, I don't know how big that is, but yeah, look, it's not that flash, to be fair, but I guess it's the left shoulder of that head and shoulders pattern which worked. So it's a level, so there's a confluence area there, and I would expect that maybe that's going to cop some action before it goes short. It's another thought process anyway. That's all. I'm not I'm not that keen to
Mm,
trade it either way for that reason. I think
mm.
there's a case for either, and when that's generally where we're at, it's not a bad idea just to watch and wait. So that's probably what I'll be doing. Ben, your question is a great question, and the reason I say it's a great question is there's a couple of schools of thought on that, and you're asking me for the rest of you, an ascending triangle does not mean price going lower? Question mark. I don't know if you are asking me, does that mean that the price is going low or otherwise? Two schools of thought. One is that it will break to the high side because that's the flat side of the triangle, if you like, and no really other reason. The other school of thought is that, well, there is a reason. The reason is, as I described before, it's been hammered and hammered and hammered and hammered and hammered, and eventually the theory would suggest that that will break eventually, and that's okay. Don't have a problem with that. The other suggestion, although I do have a counter to that, and the counter to that is the more it's rejected, the more likely it's to be rejected. So, there's nothing certain there. But the other school of thought suggests that the triangle will break in the same direction which it was entered. In this case, that would have been from the high. Sorry, it will exit in the same direction as it was entered. So, in other words, short. So there's two schools of thought here. One is that it's going to break to the low side and continue the trend, if you like, which is in this case bearish. Lower highs, lower lows, lower highs, lower lows, lower highs. And that would then be considered a continuation pattern. The contention I would have is we've got actually higher highs, I'll get this right, higher lows coming in now, and that is what's formed the triangle. And therefore, we are potentially changing direction. Not definitely, but potentially changing direction. I have always played an ascending triangle breaking to the high side. Always. And it served me well in the past. There's no question about that. So that's my school of thought. But there are definitely more than one. There's definitely more than one school of thought on triangles.
Yeah, I mean, would you also advocate the chance of just waiting instead and seeing which way it breaks, because then it would suggest that there is a move coming if it breaks and backtests the level in either direction.
Always, always, that's the best way to trade. That said, I think, as I said before, the spring is really coiling here, and this is what I call the just in case trade, and just in case it doesn't give us any sort of second opportunity at all, and the breakout is long and strong. So this will be probably one of two positions I would take should it come back off the trend line, for instance, and retest the breakout. So, that's my first entry. There may be a second. If it doesn't come back, doesn't matter. If it does come back, then there's probably a good reason to load up on this trade. So that's my thought process on it anyway, Ben. As I say, there's generally two sides to a coin, and this is one of those instances where I've heard arguments for the reverse of what I've just said. So.
Yeah, well, yeah, absolutely, and I suppose it's the key thing with any of these patterns is that there is a pattern, and if there's a pattern being created in the market, then it's probably being seen and probably being traded in a specific way. So a break in one direction or another would suggest, on the whole, not always, but it would suggest that that then there would be some follow through, which is what we're looking for, really, isn't it? We're looking for a trend and then some follow through. Just very, very briefly, the FTSE 100 has broken to the downside this morning, and market breadth is very weak, and this is the first time we've seen this for a little while. Let's just bring this in very quickly. A little bit of resistance being proven on that Aussie CAD around that pivot area. Bouncing again off the daily pivot with the FTSE 100, but the suggestion to go long would not be too attractive. We see this on a 15-minute chart here, and the first 15 minutes was pretty bearish. It's not conclusive by any stretch with these two long tails, and there's still a lot of maybe fear and emotion out there, fear of missing the move to the upside, maybe a little bit of fear that you're getting in.
You mean like me? Me
Yeah.
on the pound.
Yes, yeah. Well, maybe, but there is, but there's, there's still bounces off this daily pivot. These pivots again, they're just kind of getting in the way, because obviously I want this to start moving to the downside, and the areas of price consolidation seem to be holding up pretty well. In actual fact, looking at this, it's not just about the pivot. So it looks again, actually, looks like we've got another ascending triangle. So your particular theory would be that this would be much more likely to break to the upside.
Yeah.
Yeah. And if it was to do that, then it would probably hit a significant point of resistance again. So that's a possibility. Let's have a look where that takes us to. Yeah, you see this 64, 68 would be the target. If this breaks to the upside, that would be a target. A little bit of a problem because there's some further price action points here, which probably what would happen is if it breaks to the upside, it would hit this point, retrace, and then there'll be traders starting to get involved in this. But when we bring this onto some longer term time frames, we can see. Let me just bring this up here. We can see that there's another area of resistance over here. I know the bars aren't very clear, but you can see that there is another potential high, and this particular high as well was an interesting one, because that is where another trend was to start. So this area of resistance is much more likely to hold than the one we have. So if it does break up, then I'd be looking for that. Now the reason that I wouldn't be too keen on trading this to the upside, the way that it's shaping up, and I'm still looking for downside, is because of the market breadth. So let me show you the market breadth right now. This is the FTSE 100. It's on a slight delay, but we can see that the market breadth here shows us that only 27% of stocks are in positive territory. And there's a list of all the 100 stocks. 4 stocks are frozen to the downside, and that is leaving us with 73% are trading lower from the open. So there's a little bit of caution going out there, which would suggest that any move to the upside would not have the momentum to carry it through. So that's quite a useful little indication. That doesn't tell us that we should be going short. It just tells us that if the market breaks to the downside, the short is much more likely to follow through than if it breaks to the upside with the long trying to follow through. So that little bit of detail is suggesting at this stage that the downside may well win out in the early session. Now, we're probably still waiting on those numbers from the pound, and market breadth can turn on a penny. So we have to be very careful when establishing market breadth as an indication of trend, because it doesn't, it can switch around very, very quickly as orders get put into the market. So we're still reliant on some indication here. The downside potential could see us around about 80 pips lower from where we are. If this is to break lower, this would be the measured move of the ascending triangle, and that particular area would not be close enough, but it would be close. It would be close. I'm not sure if it would be close enough. It would need to come down just a little further. This is where I'm after, but the measured move is suggesting here. So this is going to be interesting if the market can break here. But that might be all we get. That's It's an opportunity. It would still count as an opportunity, is my point. If the market does drift into this area, it would still count as an opportunity. It's just whether it's a good enough opportunity. It's slim pickings if it only comes to that point. There would still be another 30 pip dip, which would be the attractive zone. But that is what the measured move is suggesting here. So let's wait to see which way it breaks. At this particular stage, market breadth would suggest breaking to the upside wouldn't be a good idea. The only caveat to that, of course, is that if pound data comes out and it is weaker than expected, sorry, if UK data comes out and it is weaker than expected, forcing the sell-off in the pound, then you will see that market breadth switch pretty sharply, as I say, and there could just be some people just waiting for the overall market and individual stocks to come to an attractive level before they're looking to buy it up. So a little bit of waiting going on here, mate. But I would suspect that there'll be nothing to do before that news announcement, because trading to the upside is probably not likely to get follow through with market breadth the way it is, and really what's going to kick that market breadth is some sort of data point or some news announcement.
Yep, like most indicators, it is a lagging indicator. It's telling you what has happened, not what is about to happen. And if we had a crystal ball, wouldn't it be wonderful to know which way that's going to break? It would
Yes.
be very, very...
Yes, absolutely. Yeah, absolutely.
Okay, we were talking.
We're just losing you there, mate. I don't know if we've lost you completely now, but we are losing you.
Oh, hello?
Hello, yeah, you're in and out. It's a little bit... yeah, that seems better. No, maybe not. Okay, so we've lost Jeff just for a little while. Anybody looking at anything else to trade right now?
Have I gone?
Oh, you're sort of back and forth. You're there again now. And now you've gone again.
Oh, I'm still here.
You are still there. You're hanging on.
Yeah, I am getting a bit of an interruption in my chart, so maybe a little bit of a wave of inactivity going on. Can you?
It's in and out, mate. It's really in and out. Now, the one thing that we do have, of course, here, which is a good thing, is we do at least have a pattern. So at least this is suggesting that that something afoot could actually break one way or the other, and we might actually get a trend today. I will keep my eye on the market breadth. Let me just see when this started to change. 10. Okay, so that'd be 25. So we're going to get a new read on this now. So the slight delay. Well, only 24% of stocks are in positive territory from the first 15 minutes. So what we need to see is what this bar was showing us, which is not going to be available for another 10 minutes. And then we'll see if the market breadth actually has shifted around here. Not that keen to trade before data, if I'm honest. So even if we do get a breakthrough here, it might be wise just to let this go. We will see. So FTSE continues to move to the upside. Let's just check right across the board and see what the other indications are showing us. Dollar yen. Well, there is a lower high here and a lower low, so it's possible the dollar yen starts to ease the downside. So there might be some interest in the yen just to buy a bit of protection. CAC futures are currently gapping down significantly. There was a huge fire yesterday in the center of France, so that might be something to do with that.
Yeah, Notre Dame.
Yes, you're back, mate. Yes, Notre Dame. Yeah, burnt. I'm not sure if it burnt
How
to the
bad's
ground.
that?
Yeah, well,
Oh,
I think
good.
the only good thing is it doesn't sound like anybody was involved, and anybody got caught in the fire. So you know, awful that an iconic building of such
Oh, ancient building
history.
like that, man.
Yeah, yeah,
Absolutely.
yeah. And I don't know whether that might have something to do with the CAC this morning. I'm not sure because the DAX is continuing to stretch its legs to the upside. The CAC is moving to the downside. Dow futures are currently a little unchanged, but more bullish certainly than bearish. The Nikkei struggled to get complete direction after the first flurry of the morning. Seemed to just hit this level of resistance and just get a little bit caught out there. And S&P futures are also attempting to break through some new highs of the year. So certainly some positivity is filtering through here. I'm just going to check market breadth again. Yeah, still pretty weak.
Did I hear you looking at dollar yen, or did I not?
Yeah, I was just checking dollar yen to see
What?
what the sentiment was out there, and you know
Okay.
it's had a little bit of buying with the yen recently, and we have just hit a low, and we're starting to now move back up to the high. So I quite like dollar yen for some weakness here.
Yeah, it's at a level where it's just shy, I think, of the resistance I had in mind. Well, when I say just shy, 70 odd pips, but it's certainly at a resistance level. That's without doubt. I'm waiting for a signal on this to go short, but I can't do it yet. So I'm waiting for further selling down to below the weekly pivot and then retest it from below. That would then get me in a very bearish frame of mind, but not yet. And it's very much like a lot of the crosses that I am trading. So that would be, and I see was asking that.
Oh, we are losing you again, mate.
Oh my God.
Little bit. Oh, Pedro is saying dollar yen and euro yen as
Really?
well. Both seem to be of interest to him. So I'm going to check the euro yen as well.
Okay, so I'll continue to talk. Hopefully you can hear me.
Just about. It's quite sticky.
What a pain in the
This is the euro yen. Yeah, I mean, I guess the same thing is attempting to hold on to some gains here, isn't it? The euro yen, as we see with this bar, it did break to the downside, but broke straight back up again. And yeah, very similar, very similar. We see that lower high. Maybe a little suggestion that timing could be a little bit off, but it certainly looks like the euro yen is attempting to show some signs of weakness here. Now the FTSE is just about broken through. Hmm. Yeah, there certainly seems to be some buying going on this morning. Well, this FTSE is a little bit tricky to know what to do with. I've got to be honest. Probably going to be best to wait until we get that data. But look at where the FTSE is. It's just breaking out of this or attempting anyway, to break out of this this ascending triangle. So realistically, we're probably looking for a hold. Now I'm just going to check the market breadth again, because let's see if it's changed in the favor of upside. Just starting to pick up a little bit. 40% of stocks are now in positive territory. In fact, 39% in positive territory. There's 3 that are flat, leaving 57 that are to the downside. But that is now just starting to pick up a little bit in sentiment. Yeah, the stocks are just starting to pick up a little bit in sentiment. So if we start to see those numbers become more and more solid, then the move to the upside in the FTSE is starting to become a lot more likely. You know, whether it breaks those highs, I don't know. Just looking to. You're kind of in and out still, mate. So it's going to at least rush to that point, doesn't it? Doesn't seem to be anything in its way to that point. This hour is going to be fascinating to watch. So we have another 25 minutes really before we can make some absolute decisions, just to see whether we're going to trade this triangle. Certainly, the attempt to break out is potentially quite telling. I think the fact that we've got average earnings and the market moves before average earnings is a little worrying. You know, I never really like to really trade anything before we get a news announcement when I see something like that. Right, Jeff's going to try and come back in. So just quickly check the market breadth again, and 37. So it's dipping a little bit here as well. All right, let's have a good look at euro yen and dollar yen. Let's get away from all this. And we need to check some gold as well. See what the protection is on gold. Let's start week on week. You see, this is definitely an area. It's definitely a sell zone. That's the first thing to note, that the dollar yen is in a selling area. Now, if we just compare this point here, you know, when it did start to drift to the downside, with what we need, what we need to see here, and how early there was an opportunity. Let's go back.
Hello, hello.
Hello, mate. You're back.
Goodness me.
Struggling out there, huh?
What are we on? Dollar yen.
Yeah, just looking at the dollar yen, you know, and looking to see where there was a potential signal with this one. If we look at all the different
to do what?
Well, it's in a sell zone. You know, the dollar yen is at a selling area. So is there a selling opportunity? And if we look back at these charts here, it would suggest not quite, because it was only really when it started to break through with this bar, and then we got the signal from these bars, that there was a real indication of what was to come. And it's the same, you know, when we look at this, the issue is this this area of support here. There might not be, you know, too far to run. But this is the 4-hour chart, and really we want to see a close below and then a push to the upside, knowing that we're probably going to have to take profit here with not a lot of room for a stop. So there's going to be a, you know, the first take profit zone is not that shallow. So this one might not be that might not be that attractive. You know, we might need to wait for the dollar yen to break below 111.72 before we look for the shorts, just because it could get caught in a little bit of a range here. So that's my thought on dollar yen, that there's probably not a decent opportunity. I'm just going to check the detail. Yeah, and even the weekly pivot. Geez, these pivots really are causing issues, aren't they? We've lost you again, mate, unfortunately. So dollar yen doesn't look that good to me. You could take a punt here, and try and get it down to this point. This would be the most obvious target. So you could take a punt on that one, but probably with very minimal risk. And euro yen. Yeah, complete turnaround in market breadth actually right now. We're around about 50-50 on the FTSE, so might well start to see. Now this one looks a little bit easier. This one does look a little bit easier because there's some open water with this one by the looks of things. I'll check the pivots in a moment. Yeah, it's just about the sell zone, isn't it?
Hello.
Hello, mate. Oh, you're gone.
I'm back. I don't know how long for.
You're back and gone, back and there, back and gone. That would be the area that I'd be targeting for profit. Yeah, I prefer the euro yen. It hasn't broken to the downside, which is a little bit problematic. But that is at least the risk to reward on this one is a bit more attractive. That's the one aspect of this that it does have something about it. So I see that, Pedro. If you're looking to trade this one, I see the benefit of that. I'm just going to bring in the detail. It's even got some room to the pivot. You see with this one. Maybe another chance to get to the pivot. I'd have stops at the highs if I was going to trade this one. Which would give a 2-to-1 to the pivot, and then maybe beyond. So yeah, I see it, mate. I do see it. I see the benefits of trading the euro yen. If that is your flavor for the day, I'm not sure about dollar yen. The one thing about dollar yen which is better is the setup is better, but the actual room for maneuver isn't there, which is going to make that a bit tricky. Now the FTSE has broken to the upside, and there's only one thing caging this in now, and that's this one here, which is not that far away, is it? It breaks through there, then there's some real open water, and the open water is suggesting that there's going to be a 100 pip run to the upside here. Market breadth has turned around. So you know, in the during the little push there, we started to see that stocks were starting to get into positive market breadths. Now with around about, well, 54% in positive territory, so just slightly bullish. The market breadth is slightly bullish, so we're gonna have to watch out for this area to see if it will be rejected. Interesting that that this move is happening before the wage announcement from the UK. Possible that that the market doesn't see it as significant enough to warrant worrying. Just bring that in one more time and see what's going on with the pound. Not a huge amount of movement, but as the pound moves down, the FTSE moves up. As I say, the open water's only around about 2 pips away now on the FTSE. So you can certainly start to assume that if we break this point here, unless average earnings are a complete miss or a complete beat, realistically, then there's going to be something else. How are you doing in the background there, mate? Oh, well, we can hear you. We can hear you crystal clear now.
Oh, well, just as well I didn't say what I was going to say. We would have been shut down again.
Yeah, no, you're back. You're back.
Well, that's a good thing, I think. Did you want my opinion on dollar yen and euro yen?
Yeah, definitely, because my leaning would be euro yen because of the open water, even though I prefer the setup on dollar yen. So it'd be interesting to get your take on that.
Can hang on, and
you know what? Just as I give you the charts, your internet goes again.
Oh my god.
You're sort of there. Let's try for another couple of minutes. Otherwise, mate, don't worry. You can hop out and we'll finish up.
Stiff scotch or something. Yes. Okay.
Yes, we can hear you. Yeah.
Okay. So, can you see my chart?
Yes.
Goodness me, 2 out of 2 ain't bad. So this is dollar yen. And as you can see, dollar yen, and I'm sure Ash has explained that we're at resistance here, no question. But there is another resistance level, which is lingering above here. And it's through the 112 mark. So not only have we got to get through 112, you've got another resistance area up here. So that's kind of the line in the sand for me. And I really don't know which way at this point. One thing I would say, very difficult to go long here unless that broken trend line is retested. I'm not saying it can't go. What I'm saying is it would be very difficult for me to trade that without a retest of the broken trend. Into here, going long straight into this resistance area. But that rally here.
Oh, we have lost you, mate. It's a bit robotic. It's a bit robotic. Don't worry. We can take it from here. I'm pretty sure I can see what your dilemma with dollar yen is, or to a degree anyway. So Jeff was looking actually at this on a daily chart here. And showing that this I think he was looking at this point here being the problem, and that's the same for me. You know, I've just got a little bit of caution on the levels that it can get through, so that would be problematic for me as well to trade this one to the downside. And it all really depends on on the market just buying into that protection. You know, does it want to buy the protection at this particular point? Because certainly, if it does, then dollar yen appears to be the flavor of choice, and I'll show you what I mean by that. We are going to look at gold. Where's gold? If I can find it, here it is. We can look at gold, and there's just there's no confidence here with gold. You know, there doesn't seem to be the same comfortable buying zones in gold that there is currently on dollar yen. Now, I would prefer gold, if I'm honest. I'd much prefer gold. I think there is a greater probability that we see a rally again in gold. And when I look at this, I do see a distribution pattern up here, which, you know, does start to look like a complex looking head and shoulders pattern. But we are seeing this hold along here, but we are also seeing some lower highs coming into play. So there's some pressure to the downside, and the pressure may well be just along that point there. So that certainly initially appears to be the case, that any bounces may well get pushed to the downside. This would not be an area that I'd be interested in selling. I'd much prefer to see it break and retest this area. And if it did, then maybe we start to see a genuine push to the downside with gold. And that again would be an area that could be of interest. So there's no protection in gold. There's protection certainly coming into play with the yen. Now, I don't know if you guys are aware of the carry trade, but there's a carry trade where people will borrow money in one currency, in a weaker currency, and put it into the more buoyant currency to earn the interest. So they might take a loan in the yen, for example, paying 0% interest on the loan, and then go and open up their bank accounts and put their money. Let's say they take out $1 million worth of yen, and then go and put it into an American bank account just to get the interest on the higher paying currency. And then after a year or so, they would, after they've made their money, they close down the account, pay back the loan in a smaller charging interest rate currency, and then they've made the money on the spread, effectively on the interest. So that kind of thing can start to happen, and that's how they protect their money, and still make money out of it. So we are looking at a FTSE 100 which continues to move to the upside, and I'm interested to see what happens hour over hour here. So that the stocks are now 63% positive, and the market is pushing again to the upside, which is why protection can have to be put into place just in case there's a huge move here. But the FTSE is testing these highs here, and there's a chance that it can get through. Now, if it does get through, we are probably aiming for around about 100 or so pips to the upside, maybe 95 pips to the upside if this gets through. And it might be one of those, you know, I'm not keen ever on trading a break on its own, but it might be one of those things that with a FTSE, there's just no other option but to do that. You know, this market is so unbelievably bullish. It's just looking for any kind of reason now to buy into it. It did have a retracement, but the retracement hasn't come down anywhere near as far as I'd like it. So given that, it is suggesting that a breakthrough here might just see the rally continue to the upside without being abated, and right into the Chinese numbers tomorrow, which would probably be the point that you would look to take profit. So if you're interested in buying the FTSE, I don't see there's too much wrong with with putting an order in, 5 pips above this high. After the news, certainly would be preferable. Wouldn't want to trade into that news announcement. It's around about 40 minutes away now, but at this current stage, the FTSE doesn't seem to be too concerned with a data release, which is a little bit of a worry. So we have 8 minutes to go. I don't have my right-hand man. I don't really have too much else that we can look at. As I say, not necessarily, Ben. No. Oh, sorry, you got no chart. Sorry, guys. Yeah. So this is what we're looking at with the FTSE. These are the highs here. It's dipped down, not anywhere near far enough for my taste, but it's it's doing what it's doing, and a push to the upside through this level would suggest that we're probably likely to see here. Now let's bring this up on a weekly chart instead. You see, this is a fairly significant zone here, but if we break through here, I think we're probably looking at as high as 75.20, maybe just this the high end of this bar is possible, but that's still another 40 or 50 pips to the upside. So setting targets somewhere in this zone, it could even be as high as 75.35. So we're looking for further strength in the FTSE. It's not looking like it's going to come down. We'll talk about the difference in the FTSE and the pound just a little bit. So just to bring this into context a little bit, this is Brexit. Sorry, is this Brexit 2018? No, this is Brexit. Let's go back to Brexit because that's the important time. 2016. Where is it? This here. This is Brexit, and the FTSE 100 did weaken, off the back of Brexit. Now I'm going to bring you the pound. In the same time here. This is Brexit for the pound. So both of them moved to the downside off the back of Brexit, but then the FTSE rallied. If we bring back the FTSE again, then the FTSE started to see a rally off the back of it. Now, what happens is that most of the stocks in the UK, and it's a pretty high number, 60 to 80% of the FTSE 100 companies are traded overseas. So it means their profits are collected from overseas markets. So what that means is when they bring back, and it's no different in some respects to the carry trade, if they make profits in the United States and then bring it back to the UK, bring those profits back to the UK, it's much better for UK companies because UK companies are paying taxes in the UK. With a weaker currency after they've made their profits in a higher currency, it means they get more pounds. So if they've made it in dollars, then when they do the exchange, they get more pounds back. So when the pound is weak, it is better for UK companies because of the exposure. Now, that doesn't mean that it's a binary equation because it depends what rocks the market. But if what you're seeing rocking the pound is something that is not a huge economic issue, worldwide, if you like, then the FTSE does tend to benefit from that. The FTSE has a net benefit from the pound being weaker because of the profits. But as I say, it's not really a zero-sum game because you might see the pound will weaken with a potential of bad data points, and that also would suggest that Mark Carney and the Bank of England have got less optionality to bring up interest rates, which again is good for the FTSE 100 because people that aren't getting profits from putting their money in a bank, for example, and holding it in cash. What are they going to do? They're going to go and find a better profit area, which tends to be stocks. So it's kind of twofold. So a weaker pound on the whole will be a benefit to the FTSE 100. But you have to use different barometers, you know, a stronger, and it's the same with the dollar. It's the same with the dollar. But when you think about it, if the dollar is stronger, then that's the, you know, it'll have the same aspect. It'll have the same effect on what people do with their investments over in the US, because, you know, if the dollar's stronger, why not put the money in cash, which is a lot safer, and earn the interest. But then when the dollar's weaker, then you'll see people go again towards stocks. You know, it's much better for stocks. So when interest rates start going up and the Fed is forced to start raising interest, start to raise the interest rates on the currency, then it will have, on the whole, a negative effect. So every single currency is, you know, you have to look at for a specific market. The FTSE's directly correlated with the pound, the dollar's directly correlated with the S&P, the Nikkei with the yen, and the euro with the DAX and the CAC and all the others. So so there is a correlation, but you just have to understand what is driving it at any one time. To know whether that's actually going to have a positive net effect or a negative effect, because it might be other aspects. So hopefully that answers the question. I don't know if it does, but hopefully that does. A bit of a roundabout way of saying yes, but not always. Not always. It does depend on why.
Can you hear me, Ash?
I can hear you.
Goodness gracious, Ignatius.
Yeah.
But, I'm going to close this pound order. Not going to trade it through the news with a 35 pip stop loss. Pardon me. So we'll just cancel that order.
Okay, mate.
But I'll wait to pick it up later. In particular, I'll actually watch the news happen. If there's an immediate adverse reaction, I may put it straight back on. So pound long is still my thing, but I just don't want to take the risk of a whipsaw taking me in and out through the news. So I'll look to get back into that. And as I say, if there's an immediate adverse reaction, I'll look to put that back in. I know that sounds weird, but that's kind of my MO. Okay,
mate. That sounds fair enough. Okay, well, we've got 30 minutes before we get that data release out, and there probably will be some fluctuations here and there with the FTSE. As I say, I think going long the FTSE would be of benefit after that data if we get something coming out. But let's see if we can wait for that news point to come out, because there is some open water here.
Aussie. I didn't get through that, did I?
No, you want to quickly do that?
Yeah, I do, because this may stretch the bandwidth issue again, and you may lose me, but I'll give you a message in Skype if it does. So two things with the Aussie. One is, if you have a look at the daily chart, you can see that we poked our nose above this level here, which is a confluence area. There's a support resistance / horizontal level through here as well. And it's also retesting that, apart from the fact that we've retested the trend line. Now, bear in mind that this was a news reaction thus far today. I'll go back to the 4-hour chart to display that a bit better. So what we had is a perfect retest, well, almost perfect retest of the broken trend line. And we're on our way, it would seem, not very, very convincingly, to be fair, yesterday. But then we've sold off into the news, and the news has driven the price down further. Yet, we are still in a higher high, higher low, higher high, higher low, higher high, higher low atmosphere. And we're at the weekly pivot. So I see this as a pretty good place to buy the Aussie, retesting the backside of this resistance level, horizontal wires, weekly pivot test, all sorts of things going on here. Yes, we're back underneath the trend line, but we haven't retested that either. So I think there's probably a little 30-minute trade to be had here, taking profit at this level and then giving it the opportunity to continue long. So that's what I'll be looking for on the Aussie all throughout the day. Maybe off a support trend line, maybe off a resistance trend line. But I think this is an ideal opportunity to trade long here, taking profit here. If you want, take profit at the daily pivot as well, but I don't know that I'll do that. I think I'll just take profit here and let this run and see if we can go back to trend, which is clearly bullish in my humble opinion. So that's me and the Aussie. I think that's probably all she wrote, really. I'm still keen to get long the pound, but the news is going to get in the way here, unfortunately. So we'll wait and see on that. If it, as I said, and this explains it a little bit better, if you can see what I'm talking about. If the news, when it comes out and price, let's assume price is in this vicinity at that time, if price immediately reacts in a negative fashion and starts to drive down, of course I'm talking only 10, 20 pips, something like that. I'm not talking 100. If it goes to 100, forget it, all bets are off. But if it only goes 10 or 20 pips, then I think an entry here is still a good idea, because that won't be enough to convince me that the bears are in charge, and the weekly pivot's still in play here as well. So just keep your eye on that, and if it goes bang, it goes bang, and we miss. That's just the way it is. If you don't want to trade through news, then you've got to cop that as a consequence. But if this does start to move down, and let's say within 10, 15 minutes it hasn't driven well below the weekly pivot, I will place an entry order, a stop order up here for a long. That's cable. Okay, mate, that's about my ideas for the day, thus far anyway, until the obvious happens, or the obvious wants and needs happen. And that, of course, on dollar yen, I need it to either break out here or get back underneath this trend line, as I said. Euro yen's exactly the same. On a daily chart, you can't really see it, but on the 4-hour chart, it's pretty clear. If it gets underneath here and retests it, I'm short. At the moment, it's looking like a break and retest, but I can't trade long here, not for love nor money. It's too close to the resistance level. So patience on those two, or patience on all three, I suppose. But the Aussie, I'm pretty ready to go on that. I just need a nice little setup on the 30-minute chart to be able to get in.
Sounds good, mate. Sounds good. Okay. Well, that will wrap the show for us. My thoughts on the FTSE is that I do want to wait for the news announcement. As I say, I don't like trading through a break. I much prefer to see some sort of retest. Now, there's a possibility, of course, that you could trade the retest of the ascending triangle here. That's an option. Trade that. But if not, then you're gonna have to trade the break, because if this is going to go, I think it's got some legs. The issue is definitely going to be that Chinese data tomorrow, and I'm wondering whether the market would just probably buy into that data, and possibly that sees us back up 100 pips, and then maybe tomorrow we start to get some downside. But it's going to be a complete missed opportunity if we don't if we don't put some orders in up here. So I'm probably going to buy here at well, maybe about 5 or 6 pips above, but I am going to wait for data. I want that news to come out first. I don't really want to buy into that data, because it could whipsaw this thing around a little bit. So wait for data. Hopefully it'll be down here. Check that data out. If the data's weak, that's going to be suggestive that the FTSE is going to go up. If the data's flat, then I think all bets are off, and we're probably in a bit of a range. If the data's strong, then the FTSE may actually give us an opportunity. So just by drifting, it probably won't do anything hugely interesting. But if the data is really stellar, then we're likely to see this market start to come down. But I think orders above the breakout point here is probably going to be the only option if we're going to actually grab any of this market to the upside. And there's probably some maybe 100 pips runs to the upside as well. So That's going to be the plan, mate. I think is one of those that's not usually my taste, but when a market's going up, you just have to buy it.
Yeah, look, one ascending triangle broken as it should. Let's see if the other one does as well.
Absolutely. Okay. Thanks for listening, guys. I won't be in tomorrow, but I'll be back with you on Thursday. Jeff, are you in tomorrow, mate?
Yeah, mate, I'll be here. I hope the internet is kind and we can get a full session in. But yeah, I'll certainly be here.
Great stuff. All right, guys. I'll see you Thursday. Same trade time, same trade channel. Thanks for the input and good trading. Happy trading for the rest of the day. See you soon. See you later.
Happy day. Bye, guys.